Hey, what's going on, y'all? It's your boy Steven, and it's tax season. So I was thinking of making a series and talking about different little concepts. And today I wanted to talk about two concepts, which is deductions and credits. Deductions and credits essentially reduce your tax liability overall. They just reduce it in a different way. So your deductions will essentially reduce your total taxable income. So let's say you have $50,000 worth of taxable income and you had a deduction of $10,000. That would bring it down to $40,000 of your taxable income. So you would only pay taxes on those $40,000 rather than $50,000. And then you have credits. Credits are very valuable and I think they're pretty great, but you can't knock deductions either. So some credits are refundable and some credits are non-refundable. So credits essentially reduce the total amount that you would pay at the end. So let's say you owe $3,000 for some reason and you have credits of $2,000, that would decrease it to only $1,000. So you would only pay $1,000 to the IRS. On the other hand, let's say you owe like $500 and you have a refundable credit of $1,000, you would essentially bring that number down to zero and get $500 refunded back to you. Then they also have non-refundable, which essentially would just bring your total tax liability down to zero. If let's say you owe $500 and it might be $1,000, it might be $2,000 of credits, it'll just bring it down to zero. So you don't owe anything. So it's a win-win essentially, unless you owe, of course. But yeah, I'm thinking of doing a tax series, especially for newer people or people who have been doing it for a while and just want to understand things more simply. So if you guys like this, make sure to follow. And I do plan on breaking down more things, especially because it's tax season. And yeah, let's spread some knowledge out there. Take care.